Happy Friday, traders. So we've just heard from Donald Trump hinting that the previous frontrunner, Kevin Hassett, may not be considered to lead the Fed, and instead the odds of the second frontrunner, who is now leading the polls, Kevin Warsh, increased, and that has caused the US dollar to rally. We saw in response precious metals take a dump. This is a hourly chart of silver. And we also saw gold prices fall as well. But so far, the losses have been contained, at least on a relative basis. If you look at silver prices, we saw an immediate 6% drop from its earlier highs, but it's bounced back quite strongly at the time of this recording. The key levels to watch on silver include 86.25, which was the most recent low that was created yesterday following an even larger drop, but that level held and we bounced from it before silver went on to climb back above the $90 level. It has been oscillating around this $90 level, which is an important level now to watch. And for as long as it holds below it, there's a risk that we may see a correction of some sort in silver prices. But if 90 were to be reclaimed, then I would like to see a break above this trend line that has been in place since prices peaked in the middle of the week. Above that, we could well see silver extend its rally towards 95, possibly even open the door towards the 100 level, which is the next big milestone. And obviously miles away from where we are, but silver has been racing in recent times, hasn't it? So it wouldn't take too much for it to get to those kind of levels. But with the dollar finding support on the back of Trump's remarks, this could potentially put some downward pressure on silver prices. So do watch that level closely, because if it were to break, then that could pave the way for further technical selling, I believe. Even so, the downside should be limited in the grand scheme of things, given how strong the trend has been in recent times. And there are lots of support levels on the way down that could act as cushion to prices. Gold prices also fell quite sharply on the back of Trump's remarks, falling by around 1.5% before bouncing back. Gold found good support for the time being anyway from this area of support, which was previously resistance. The top of the range is at around 4,550. That level was the record high hit in December before we saw that late year dump, which then eventually got reclaimed. So we've moved above that level, and this level was always exposed for a retest from above, which we have now seen. So far, so good. Gold has found support, as you can see by the wick of the candle, keeping the bullish trend intact. But with the dollar coming back, do watch out for signs of a possible trend reversal. If the area I mentioned between 4,500 to 4,550, the shaded blue area breaks down, then that could make things more interesting in the days ahead, in which case we will see continuation towards the shaded gray area where previously gold had found resistance back in October before finally breaking above it. That area also happens to converge with this bullish trend line, making it a key area of potential support. Now on the upside, yesterday's low comes in at 4,581, this level right here. So far, it's looking like gold has reclaimed that level, but let's see how it closes. A close above that level would be quite bullish, I would say, and in which case we could well see a new record high in early next week. And above that high, there's not much in the way of obvious targets, but do keep an eye on the round handles like 4,700, 4,800, and so on. Also, I've got this Fibonacci extension level from the previous significant downswing, which comes in at around 4,687, making it an ideal profit target area for Fibonacci-based traders. In the FX space, keep an eye on the cable, which has found some resistance in recent trade at around 135 before breaking below 134 yesterday, and now it's holding below that level. And that's where we have the 200-day moving average converging as well. The dollar has been climbing on the back of mostly stronger than expected economic data. And now the announcement by Trump Meanwhile, in the UK, we've had some mixed data of late. GDP grew more than expected, but construction spending, or construction output, I should say, was quite weak. Next week, we'll have UK inflation data, wages data as well, which could give us an idea about how close we are to seeing further rate cuts by the Bank of England. The market is expecting around 2 more rate cuts this year from the Bank of England, and the timing of those could be brought forward should the economic data come in weaker than expected. Key levels to watch then on the cable: 134 is your first resistance. In terms of support, there are no obvious levels to watch, so keep an eye on 133 next, which is the next round handle, and then below that 132, 132.20 precisely, marking the breakout from a previous consolidation range. For more market updates, head over to City Index, where you'll see our latest analysis content. Have a great weekend. I'll see you in the next one. Take care.